Welcome. Yes, a big welcome to everyone who's joined this second part of our PPA webinar series. The first part, I must say, is available on our YouTube channel, and you can also access it from our website. But this is the second part, and before we go into the matter, a few words on who we are. Who is Vate? Vate, we are a one-stop shop for analytics provision, specializing in data insights and insights for all significant low-carbon markets. Our goal is to bring transparency and analysis on opaque and emerging green markets in order to support you to make more informed decisions through the energy transition. And I'm very proud to say that we recently, just a few months ago, launched our PPA product. Our PPA product helps clients to assess what is a fair value price level for a PPA, with a full range of flexibility for the client to choose which asset they want to look at, the contract structure, the contract lengths, and what is included in the PPA. In addition, our PPA product pages provides analytics, news, and updates that allows you to understand and follow the PPA markets in Europe. For the launch, we covered German onshore wind as a very significant PPA market in Europe, but we're already engaging in a rollout plan for other technologies and markets across Europe. So if you're interested in a demo, please reach out to anyone in the team and we'll set it up. But with me today, I have two of our specialists in the field of PPAs and the PPA market. That is Irina Peltegova and Lisa Safonchnik. They will present the status of the PPA market in this first almost half of 2024. By the way, the webinar recording will be sent out by email after this call. And also, if you have questions that come up during the webinar, please use the Q&A functionality and state your name so that we can answer it. If we don't have time to answer all questions during the webinar, we'll send it out, provided you have given us your name and details. Okay, so to the agenda. This is quite a long agenda, but its logic is rather simple. We first display and comment on the deal flow of PPAs in Europe so far in 2024. Then we will show how the underlying markets and their driver for PPAs have developed during that same period. And before we tie it all together with an explanation on how these factors affect the fair value of PPAs and therefore how this will unfold and be translated into PPA prices. So I first hand it over to Irina to run us through the PPA numbers so far in 2024.
Thank you, Knut. Yes, so thank you everyone for joining. First, I'll start with a bit of an explanation on how we approached our methodology in compiling the PPA data. As you know, the availability of PPA market data depends on the information that is released by the individual buyers and sellers. And oftentimes, those announcements lack key information specifically on the size of the contract, which is, of course, a key metric in assessing the growth of the market. And as we're trying to paint, the full picture in a fairly opaque market, for the benefit of this webinar, we have tried to fill the gaps wherever possible. And these figures that you're going to see in the next slides may be a bit different from other providers, but that's because we have applied an extensive methodology by basically when we have incomplete data on the size of the PPAs, this has been solved by converting between capacities and energy delivered using average technology-specific load factors, and also average PPA sizes for the country and the technology in the last 18 months have also been used to fill the gap. And this actually concerned about 4% of the total PPA capacity in the first 5 months last year and 9% this year. So it seems that the market is actually getting rather less transparent instead of the other way around. Usually the actual price of the PPAs is not revealed at all. So the wholesale power market is really the best reference point when you're trying to figure out where the PPA prices are going. And this is what we'll be looking at today. But first, let's dive into the PPA data. So we're starting here with a few metrics to assess how the market has been, whether the market has been growing. So on the left-hand side, we have the pure deal count, and that graph is very clear. It shows, yes, the market has been growing. We've seen over 130 announced PPAs in the first 5 months, which is over 50% increase from the same period last year. In terms of contracted capacity, so the graph in the middle, we're also seeing an increase there of about 10%. But then when we look on the right to the annual delivered energy, actually the figures are almost flat year on year. And this is probably because we are seeing that solar as a technology is being contracted more. But let's go into more detail. Right, so as I already mentioned, you can see solar is kind of dominating in terms of technology when it comes to the deal count and also contracted capacity. So these are, again, the slides on the left and in the middle. But if we look at the actual delivered energy per year in terawatt hours, it's actually wind that is dominating the market. And especially, like you probably see, the offshore wind delivered energy for last year still outstrips this year. This is because normally offshore wind deals tend to be quite big in size. And last year in particular, there were a few flagship offshore PPAs in Germany that boosted that number for 23. Some other kind of takeaways that I wanted to point out is also the rise in multi-technology PPAs, kind of relative rise. Mostly it's a combination of solar and wind. And this is a trend that we expect to continue because combining the technology gives producers more flexibility to balance their generations. But also the hybrid PPAs. So where now we start to see the emergence of PPAs combining, let's say, solar or wind with battery storage. So far only one deal this year, but again, an emerging trend that we expect to grow, especially with the current quite volatile market that we're going to present in the next slides. Next one, let's look at the countries. So which countries have attracted the most interest? So Spain and Germany are kind of fighting for first place, depending on which metric you're looking at. In terms of deal count, Germany, a clear winner. In terms of contracted capacity, Spain. And, you know, this is not really a surprise. And likely we're still going to see a lot of interest in those markets, especially in Germany, where a lot of older generators are reaching the end of their support schemes. So for them to be profitable to stay online, PPAs is really probably the best way. But I also want to draw your attention to some other interesting markets to keep an eye on. So, for example, if we look at the graph on the left, in terms of deal count, UK and France have seen now 14 deals each so far, compared to less than 10 last year. Also in terms of contracted capacity, UK has seen a big growth, but also Greece. Greece is quite an interesting one, probably the most developed market in Southeast Europe, where we've seen a fairly large size deals, even though in terms of count they're not that many. But we have big players there now, like RWE, PPC, Mytilineos, that really drive the market. And then on the right-hand side, when we look at the delivered energy in terawatt hours, again, UK and the Netherlands have seen an almost tripling of that volume year on year. So yeah, definitely. Again, markets worth watching. But what also these graphs indicate is that it's not really clear cut. How this ranking looks, apart from like number 1 and 2. The rest is really dependent on our interpretation of like what metric do we use to assess the market. Moving on, just a quick look at who is on the buyer and seller side. This and last year, on the sell side this year, Engie and Shell are topping the list, and on the buyer side, not really surprising, big tech, Amazon and Google. Last year, at the same time, it was mainly the big industry. Although it's worth mentioning that for the whole of 2023, it was still Amazon who was number 1. So in that regard, like nothing has really changed. It's still big tech and industry who are on the buy side of those deals. And that's on the PPA data. Knut, you're muted.
Thank you, Irina. So in your mind and your assessment, what is the most interesting development? What market segment or market would you point out?
Yeah, as I mentioned, I think definitely I would expect that we're going to start seeing more multi-technology and hybrid PPAs being signed. But also in terms of the actual markets to look out, I think definitely Southeast Europe has a lot of untapped potential. As we saw, Greece now is emerging as one, Poland as well. But there was also a lot of new installed capacity last year as a whole in Southeast Europe, with more coming. So I would also look at markets, or rather keep an eye on markets like Czech Republic, Hungary, Romania. That's kind of the newcomers later this year, probably.
Okay, thank you. So PPA markets in Europe are continuing to grow, but why? Is this because of more attractive pricing, or is it because of higher needs for financing of new wind and solar? Let's look at how the underlying power markets have performed. Lisa?
Yeah, thank you, Knut and Irina. I'm going to look a bit about the underlying power markets. I mean, as Irina mentioned, it's quite difficult to get a good quality data in this fairly opaque market, for one, on volumes, but also even more on prices. And even if data is available, it's often quotes from individual contracts that can differ very significantly in terms of what contract structures are considered, what technologies, what tenures, and even what countries you're looking at. So one more standardized approach is to actually look at what the fair value of the electricity contracted within a PPA would be. When we mention the fair value, when we calculated what we talk about, in this case for a pay-as-produced contract, we consider the base price. So that's the average electricity price, the value of baseload electricity. Then there's the factor of having a volatile generation profile, or just the generation profile that deviates from the baseload, which is affected by the capture cost. So also often referred to as profile cost, or if you know the term capture price, the capture cost is just the difference between base price and capture price. Also the imbalance cost, so the cost incurred by the fact that there's going to be an error, or in most times there's an error between what is actually forecasted to be generated and what is generated at a certain point in time. In addition, the value of guarantees of origin for the purchased electricity within a contract is considered. So all of that together makes the PPA price for, in this case, a pay-as-produced, as mentioned, but different contract structures, different cost components will be carried by different counterparties. So to actually assess these different contract structures, that's one option you have on our platform to browse through baseload, monthly baseloads, or just different contract types. But let's start out with looking at how base prices have developed, or how electricity prices in general have developed, taking a bit of a step back. I mean, we've come out of some turbulent years of the energy crisis. Any curve you're showing now with this perspective will always look minuscule compared to the prices we saw the past years. So in terms of monthly day-ahead electricity prices, as shown here for some exemplary European markets, we had sort of a level of around 50 euros per megawatt hour the years before, 2019, 2020, low prices in the Nordics in 2020, though, then saw extreme high prices in 2021, 2022, start of last year, and then prices have started to relax to more pre-crisis levels. Now what we've seen in the start of 2024 is, for one, prices in Germany, often like a reference market for all of Europe, have relaxed to lower levels than they've been on. That's partly lower gas prices, lower demand, but also, as we're going to see, a lot more renewables. Even more striking, prices in Spain have been on extremely low levels, levels that we hadn't seen in quite many years so far. Finland had low prices last year as well, so lower prices in the Nordics there, and is at a similar level this year. To put that into a bit more perspective of daily electricity prices, showing this volatility that we're seeing in the markets at the moment. I mean, as mentioned, Finland already had quite some low prices last year, days of 0 and below 0 prices, but also some quite extreme events. We had this bidding error in November, resulting in high negative prices on the day-ahead market. We had a cold spell in January, resulting in extremely high prices, but generally sort of a volatile generation pattern as we've come into the first part of 2024. On a contrast, Spain has seen prices being quite closely following the rest of continental Europe. So Germany here as a reference last year, but now have had many, many days of very low prices. We're going to get back to the reason about that in a second. While German prices, as mentioned, have sort of come to a lower level, still seen similar volatility as before. So to compare that directly on a monthly basis, how did 2023 look compared to 2024? The first 5 months, Spain, 60% lower electricity prices on average. And I mean, in April, average prices below 20 euros per megawatt hour. That is quite an extreme low price level. In Germany, we've also seen close to 40% lower prices, but still at a more, I'd say, reasonable power price level, whereas Finland is in a similar range as last year with just higher prices in January in this cold period. When I showed some volatility metrics just on daily level, but where things really happen is on an hourly basis, and that's also what impacts the value of renewable generation within the PPA quite a lot. So looking at the duration curve, one thing we see, yes, there's these extremes, there's these very extreme low prices that we've seen in Germany, below minus 130 euros per megawatt hour, had these very extreme prices in Finland in January. But what's most noteworthy here and has been causing this decrease, especially in Spain, in average electricity prices, baseload prices, are these many, many hours of negative, zero, and close to zero prices. So there we're seeing Spain with a lot of these low-priced hours, followed by Finland and Germany. And this trend is what we're analyzing on this slide. So looking at how many hours of negative prices, so below zero prices, have we seen in the power market in the year 2023 and the first 5 months of 2024. So the trend started out pretty similar for Germany for the start of the year, and then came the sunny months, April, May, and we got a lot more negative price hours. So 160 compared to 66 for the same period last year. And that's not just Germany. I mean, it's obviously a connected market, but we've seen a lot of negative price hours all across Europe. Quite striking, Spain, that hadn't seen any negative prices up until the start of this year, is now above 100 hours of negative prices already. Finland already topping the list last year, also seeing an extreme number of negative prices already this year.
Wow, Lisa. these are quite dramatic differences year on year. But at the same time, directionally, I would guess they go in the direction we could expect this. So how surprised should we really be about this development?
Definitely the direction we've been expecting. I mean, coming out of these years of energy crisis, everyone expected prices to come to lower levels again on average. Also with more and more renewable build-outs, expecting more hours of a lot of renewable generation in the system. It's not really coming as a surprise. I think the scale of which it's happening at now is really the surprise. And we're going to see more of that, I think, as we continue in this presentation. But I think trend-wise, not shocking, scale-wise, quite surprising numbers.
Okay, thank you. So these low prices, how can we explain them? What drives that? Is it the increased deployment of wind and solar over the years and coming to some tipping points, or is it just a question of different weather types going through Europe in the first 5 months of the year? Irina?
Yes. Well, yes, let's look at the data and see what it shows us. Let's look first at the renewable generation as a whole for the first 5 months. As you can see on the left-hand side, both solar and offshore wind had double-digit growth. This year, onshore wind also a slight increase. So overall combined solar and wind production was up 10%, with a peak in April. And if you have a look at the graph on the right hand side, so we are coming towards the end of the peak for wind generation in particular, because that tends to be more the winter spring months, but we are yet to actually enter the peak for solar, as the summer is only now starting. And as we saw, Spain already had some extremely low prices. So I think, we are in for a very interesting summer as the weather gets sunnier. And also looking at just the sheer expansion of capacity, this is also worth definitely mentioning. The increased production is definitely linked to the continued growth in installed capacity, especially last year. So the compound annual growth rate for wind has been about 6% in the last 5 years, and 14% for solar. And of course, this is a very big achievement, especially worth mentioning last year. Southeast Europe, or rather more like Eastern Europe as a whole, we're talking Poland, Hungary, Czech Republic, Romania, Bulgaria, Greece, installed over 11 or close to 11 gigawatts of solar. And that's really massive. And so far this year, from the information I could gather, just for the first few months, we are seeing even more. So Italy topping there the kind of the charts with over 2 gigawatts of new solar between January and April. Spain had a bit more, Poland, Bulgaria. So yeah, this is definitely a trend that we don't kind of have a reason to believe it's going to stop this year, or rather it is likely to accelerate. And now let's look also at the weather conditions as well. First, let's look also at the temperature. This, of course, would not have had a direct link to the production, but it still would have affected and did affect the wholesale market because it affects the demand. So not really a surprise, but it was a warmer year than last year, mainly for Central and Southeast Europe. So yeah, whether he's already giving us some indications that it did play a role. And now if we also look at the wind speed and solar irradiation, so there's no kind of uniform picture, but on the wind side, we saw very, very good wind conditions in the North Sea, where we currently have the majority of offshore wind capacity. So this definitely links to that big increase in offshore wind production that I showed in the earlier slide. And then on the right-hand side, the solar irradiation, as you can see, Central and Eastern Europe, very, very sunny. As I already mentioned, this region already has seen a lot of new capacity coming since last year. interestingly enough, as you can see, Spain is quite blue there, so they didn't see that much sun as they could have, basically, and this still led to these extreme prices. So yeah, quite an interesting summer ahead, I would say, as we progress into the year.
Thank you. So what we see here is a mixed picture, but in your assessment then, Irina, was it the deployment of more wind and solar, or was it the weather that caused this steep drop in power prices?
I think it was definitely the deployment, especially in solar. Last year was definitely the year of solar. So I would count on this to have had a slightly bigger influence than the weather.
Okay, then so what we've seen is that baseload power prices are low for different reasons. But what about the price that a typical wind farm or solar plant can obtain? What we call capture prices. How have they fared, Lisa?
Yeah, I mean, no big surprise here. Seen low base prices mainly because we've seen a lot of hours of low prices. And these low priced hours typically are hours where we have a lot of excess renewable generation. It's been a year of a lot of solar generation so far, as Irina has shown. So what we're seeing on these charts is really a bigger and widening gap between the base price and the capture price of, in particular, solar. We look at the left chart showing Germany, the price level we've already looked at on previous slides. Onshore wind, offshore winds have following a similar trend as the base price, but then solar really seeing this stark decrease as we move into the summer months. So while we've seen power prices being at around 66 euros per megawatt hour on average, the capture price of solar in Germany has been close to 40 euros per megawatt hour, and even in the past months, getting close to just 30 euros per megawatt hour on a monthly basis. And the picture becomes even more extreme looking at Spain. I mean, we've seen very low base load prices, and on top of that, very, very low capture prices for solar. So even just 36 euros per megawatt hour on average as a baseload price is very low, but then 19 euros per megawatt hour, so below 20 euros per megawatt hour for solar capture prices on average the past 5 months, and even some months of below 10 euros per megawatt hour. That is quite a striking picture. To put that into perspective, it's a bit difficult to just compare the capture prices because the capture prices are very much dependent on the base price. And we've seen the base price alone has moved quite a lot from how it was a year ago and what it looks like now, or what it looked like the past 5 months. So a metric that's better to compare is the capture rate. So that's the ratio of base price to capture price. So how much of the base price can a solar asset capture in the market? I'm seeing here on the left for solar in Spain and Germany, the dotted lines showing 2023, sort of trend of typically lower capture rates in summer when there's more solar generation in the system as well, but always above a level of 60%. Now, looking at the 2024 numbers, we're on average already close to that minimum value of last year. And for individual months, close to 40% in terms of capture rate for Spain. Interestingly enough, that's actually helping onshore wind. So we're seeing pretty similar capture rates as we saw last year for the first half of, or first 5 months of 2024, because the lowest priced hours in the system are now, in so many instances, these peak daytime hours of solar generation. So if onshore wind then produces in nighttime hours or in hours without sun, they really benefit from the comparably higher price level, even if overall price levels are low. And the exception is the start of the year in Spain, just seen some quite extreme prices in general that also affected capture rates for onshore wind there.
Yes, thank you, Lisa. So some spectacular reduction in capture rates and capture prices. This is what we call cannibalization, right?
Yeah, exactly. So what you would refer to as cannibalization is the effect that having more of the same technology that typically produces at the same time in the system, they eat up each other's revenues. So that's what we refer to as cannibalization.
And I find it interesting that it's not symmetrical. It seems that solar is hurting more than wind here. But let's move on. In the breakdown of a fair value pricing of a PPA, we can call this then capture costs. And the capture costs in the buildup of a PPA value is generally the largest cost item. But what about another big cost item, the balancing costs? Lisa?
Yeah, I'm happy to talk you through the balancing cost part as well. As Knut mentioned, typically the part of base price and capture costs are really the main components in pricing PPAs, but it's also important to have a view on how balancing prices are going to develop and how balancing prices impact the imbalance cost of individual assets. So on the left-hand side, I'm showing here an example for Spain. We're seeing balancing prices or prices in the balancing market for 2023 and 2024. These prices are quite strongly correlated, at least on a monthly basis, to the day-ahead electricity prices. So not really a surprise there. We had higher prices last year, lower prices this year, and that's also visible in the balancing markets. But what's relevant for renewable assets is the imbalance cost they are facing. So that's not only affected by the balancing price, but also by the forecasting error so the volume that they need to cover in the balancing markets. And for Spain, if we look at the values for 2023, so the dotted lines, we see solar typically incurring a higher imbalance cost than wind. It's a system that's has quite a lot of solar. So typically most of the forecasting error also comes from solar and thus impacts solar assets more. If we then look at 2024, we see slightly lower imbalance prices for both technologies. The trend is still pretty much the same, higher for solar, lower for wind. But I also want to point out April, which seems quite odd because wind is actually on a negative cost here on average, so actually earning in the balancing market. And this is because in this case, or in many instances in that month, wind was on the right side of the imbalance compared to solar. So solar, I would say, caused most of the imbalance, and then wind actually supported the system and was being reimbursed by that. As another example, looking at Finland, there are two very different systems, one in very sunny southern Europe, the other rather cold in the Nordics, and that's also what's reflected in what we see in terms of balancing costs. So balancing price, again, we had similar price levels on the day-ahead market for 2023 and 2024. Some extreme occurrences, January and December in the colder months of the year, that also are visible on the balancing price side of things and then translate to the imbalance cost. But when we look at the imbalance cost trend, what's interesting here is we have a system that's much more dominated by wind, or most of the share of renewables in Finland is onshore wind. So that's what usually causes the forecasting error in onshore wind, causing the imbalance in the system, and solar actually supporting that imbalance on average, at least last year, with the exception of these very extreme months that affected all renewable generation in terms of imbalance cost.
Yes, thank you. And it looks then, if I can read the graphs correctly, that in Spain we have seen higher volatility in balancing costs, but the same cannot be said for Finland. What do you think can explain this?
So I think two things. One is that they're very closely related also to what's happening in day-ahead markets. But the other thing is they're two very different systems. I mean, in Spain, we're in the middle of this energy transition, more and more renewables, volatile generation, so more and more potential in forecasting errors coming into the market, whereas Finland is more integrated into the Nordic system with a lot of hydro, so a lot more kind of stability and reactability in the system.
Okay, thank you. Now moving on. Guarantees of origin can also drive the value of a PPA and could potentially drive them up again and be a counterforce to these other forces. What is happening in the market for guarantees of origin, Irina?
Yes, let's have a look. So for those of you who may not have kind of followed the geo market closely, on the left-hand side, I'm showing the development of the Nordic Hydro current year, which is the Nordic Hydro is kind of a benchmark for the geo market. So as you can see, we had some really record high prices at the beginning of last year due to reduced supply, especially the fact that it was 2022 had been a very dry year, and this was kind of translated into the beginning of 23. But then from the beginning of from the middle of 23, prices have started to come down gradually, and then they continued to go down also at the start of this year and even now. So quite a stark bearish trend. And how we can, like, why did this happen? How can we explain it? So if you look at the graph on the right, you see the bars, so the issuance, which represents supply on the market, and the cancellations, which represent the demand. So specifically for 2023, you can see quite a big gap there between the supply and demand in favor of the supply. And it's worth mentioning that the fairly kind of not so good economic situation last year definitely affected the demand. Although one thing to mention, the 2023 figures, especially the bar on cancellations could be a bit higher because we're still waiting for some data from some countries because the disclosure period runs until the end of March of the following year. And sometimes there's a bit of a delay in displaying the data. So yeah, this figure may change. So the gap could be slightly less. And then the 2024 bars, they come from our midterm forecast. So again, it's just a forecast, but what we expect is that, the gap to continue to shrink, especially that, for this year, the economic outlook is much improved. So the demand side should start to kind of gear up, so to say. So yeah, this is the situation at the moment, fairly bearish for the time being, but with the potential to improve again.
Okay, so doesn't look like we can get much help from the guarantees of origin fields, but what else is likely to drive the market going forwards for guarantees of origin? Can we get some help when we look ahead?
Yes, definitely. So yeah, at the moment, as I said, a big oversupply, especially linked to, of course, what I already mentioned, a lot of deployment of new renewables. And now the question mark is how would then the demand catch up with the supply? And actually, we do expect that to start happening because there are a lot of new or newly approved and voted European regulations that are expected to basically push companies towards using geos to green their supply chains and just their activities. There are many of those, the Corporate Sustainability Reporting Directive, the Green Claims Directive, State aid schemes, the Sustainability Data Center directives, RFMBO. There's so many, and as we are reaching now, kind of, or rather going closer to 2030, with everyone trying to get those targets. We should start seeing more activity from the corporates that should boost the demand side for geos.
Okay, so maybe there is hope there. But okay, we've looked at all the components in some detail. how does this all translate into a fair valuation of a PPA, Lisa?
Yeah, so we've looked at all the different pricing components, looked at a lot of charts, a lot of lines, and it's then the question of how does that actually translate in what will be the value of the electricity contracted within a PPA. What I'm showing here is a bit hypothetical. You're not going to go back in time and contract the PPA for the first 5 months of 2024. But what we're showing here is if you had known exactly how the market were to develop these first 5 months of 2024 compared to 2023, what would the value of the fair value of a PPA have been? Starting off again with Germany here. So if we look at the left chart and focus first on the column in blue, so that is the resulting fair value PPA price, we already see that's quite significantly below what it was or would have been for 2023. There's several factors to that. One is obviously much lower base prices, but also especially for solar, having this very large component of capture cost. I mean, 24 euros per megawatt hour of discount compared to the base price. Also high balancing costs for solar in Germany in 2024, and then only a little help there from the guarantees of origin, resulting in fairly low PPA price or fair value price for that period. Bit better for wind, as mentioned, the capture cost effect just hasn't been as significant, not that much cannibalization, that much effect on the capture price, but we still see a lower price level than we saw in 2023, which directly translates to a lower PPA fair value price for 2024 as well. But when it gets really interesting, and I mean, these charts, when I first got out these figures, shocked even me looking at the price level of the fair value price of the PPA, the solar PPA in particular in Spain. So the left chart, where it was around 76 euros per megawatt hour last year for the first 5 years. And now we're below 20 euros per megawatt hour. So really, again, extremely low base price level, even bigger effect of the capture cost, some imbalance cost that more strongly impacted solar compared to wind, and then similar geo price level. Still for wind, I mean, the effect is similarly strong because the base price level is so low, but the capture cost component is a lot smaller compared to solar. So there we're seeing 32 euros per megawatt hour as the value of a pay-as-produced PPA with guarantees of origin included for the first 5 months. And as mentioned, that's of course very hypothetical, but it paints a bit of a picture of where the market is standing at the moment and what expectations, what is the starting point for future expectations. But when we price a PPA, we're obviously pricing into the future. We're looking at future generation. So one of the main pricing references is using power price futures. What we see on the left here is base futures for Germany compared to the historic price level. So the blue line showing historic monthly average day-ahead prices, something we've already seen before, this sort of average level of around 66 euros per megawatt hour for the first 5 months of the year. And then futures are obviously being traded continuously, so there's going to be different settlement prices, different price expectations at different points in time. That's reflected by these dots. So we're seeing price expectation for future contracts for the next year, 25, 26, 27, 28, and the dots indicate the average monthly price of these contracts for the first 5 months of 2024. Started out with being somewhere in the middle, higher expectations for the longer term. Since then, we saw quite a drastic low expectation or a much lower expectation for prices around February, March. And now actually in May saw higher price expectations for the first upcoming year, 25, as a moderate around this 70 euro per megawatt hour level in the longer term. To the right, that's showing these expectations for end of May. So showing Germany, Spain, Nordics, Germany above the expectation for Spanish prices. So Spanish prices seeing that, okay, we've had low prices, that's translating a bit, but it's not these extreme levels we're seeing now. And Nordics below that again, though they're obviously take it with a grain of salt. We know the forward markets tend to be very optimistic on how low prices can go. And now, probably what everyone's been waiting for, how does that translate to future PPA prices? Now, the images might not be that simple to understand by just the first glance, so bear with me. Let's stick to the x-axis. That's similar to what we saw on the left chart before, reflects the dates in 2024 for which we consider the future price expectation. So each of these three colored dots reflect a certain point in time where we've taken future price expectations for the German market. And then the three curves reflect a 1-year PPA, a 3-year PPA, and a 5-year PPA, including our forecasted expectations for capture costs and guarantee of origin prices. So this, what you've already saw a bit before, that we had very low, or there were very low expectations for prices moving forward around February, March. That's visible here. So that was the lowest point where a 1-year PPA for 2025 would have been valued around 70 euros per megawatt hour. But if you consider the expectation towards the end of May, the similar contract would be above 90 euros per megawatt hour. It's also, you also see that the effect was largest on the short-term contract compared to the more longer-term 3-year and 5-year PPAs. For solar PV, the spread between the 1, 3, and 5-year PPAs is larger just because of the cannibalization effect already being large and expected to increase more and more over time. Just quickly showing the same image for Spain, where similarly the expectation for the upcoming year, so 1 year 2025, has been gradually moving up since February of this year, whereas the more long-term price expectation is more stable, again, affected by the capture cost of the different technologies, but yeah, on a more stable level for 3 and 5 year PPAs. And I think that what's striking here is really that we see these very low price levels now, but if we look at forward market expectations, and if we convert that to PPA prices, we don't see that to be sort of the market expectation for the future. And I guess anyone who was lucky enough as a seller to be secured with a PPA throughout this rather low priced period has seen the benefit of signing PPAs. And as we're moving into more volatile markets, and just securing yourself against these risks is probably not the worst idea.
Ooh, okay, so does that mean that industrial companies across Europe who have signed expensive PPAs in the last few years and are seeing wholesale prices and all the other making their PPAs very expensive currently, that they will get a respite and be back in the money over the next years? How do you see that, Lisa?
I mean, that's a bit difficult to forecast directly, but one thing we're clearly seeing is that the market expectation is not that prices will be at these extremely low levels, but rather that PPA price levels will become more attractive for both counterparties. Again, another note, I mean, when we're looking at these future price expectations, we see there's a lot of movement. And typically when you go into a PPA pricing negotiation, yes, you're going to look at futures, but you're also typically using some third party or in-house fundamental model curves that give you a more robust view. And all of those scenarios are actually pointing in the direction of we're not forever in the realm of 30 euro per megawatt hour power prices, but moving into a more stable system.
Okay, let's see. But my take is that markets are volatile and seem to have a mind of their own. Possibly we can rely more on the policy and regulatory side. What do you think, Irina?
Yes, definitely. Here I've listed just a few examples of how kind of Europe as a whole is trying to improve the electricity market design so that renewables are even better integrated, and we can start seeing now a reduction of the, for example, negative price hours. So a few things I'll mention here just because we're running out of time. One important piece of legislation that was recently adopted or voted by the European Council is the electricity market reform. Three key things that I think would have the biggest impact on both the PPA and the wholesale market. First, for the PPA market, member states are being asked to basically facilitate the deployment of PPAs as much as possible, remove barriers, potentially integrate, or rather making it easier for smaller off-takers to also get their piece of PPA by, for example, offering state guarantees. Then on the market side, soon smaller size products should start being offered on the day-ahead and intraday markets, which are aimed at demand side response and battery storage. Another important one, the intraday cross-zonal gate closure time will be limited to maximum 30 minutes from January 26, which means that renewable generators will be able to trade as close to real-time production as possible, which should minimize those forecasting errors that Lisa was talking about. And Acer is already preparing for basically implementing those regulations. So currently there is a consultation running until 19th of June on the implementation of co-optimization in the electricity day-ahead coupling algorithm. And this is key to integrate the balancing market with the wholesale market, because at the moment the balancing market generally are completely disconnected. They run on national level. The TSOs have different methodologies, and in some instances, in certain countries, balancing costs can be really extremely high because of that. And what this co-optimization would mean is that market participants on the day-ahead market will be able to bid simultaneously for both, so to place supply-demand bids for both electricity on the day-ahead market and also balancing capacity. Which is expected to do over time, as I said, as the balancing market becomes integrated, to also reduce the balancing costs. Then another consultation will run soon, which is an assessment for the need of standardizing PPA contracts, which I think it will end with stakeholders saying, yes, we do want more standardized PPA contracts if possible. Whether Acer will be able to deliver something that will be widely adopted and how long it would take Acer to do it is another question. So let's see. And then one last thing to mention, the draft network code on demand response that will be consulted on in autumn is again related to this, to the integration specifically on demand side response, but also energy storage. And I think now it's kind of the time that will open up the investment in energy storage, which is going to be key for, again, battling with those negative prices and very low prices in certain hours. So I think that the market is not done yet in terms of kind of integrating everything in renewables into the system, and we should see an improvement.
Okay, thank you, Rina. And what I take away from that is that the policy and regulatory side, at least, is facilitating and laying the groundwork for increased growth, and possibly also helping out some of these balancing costs and cannibalization that are hurting the fair value of PPAs going forward. Would you agree with that?
Yes, definitely.
Okay, thank you very much. We'll go into a few questions from the Q&A. There have been some incoming. But before then, I just want to mention that we are planning a third part of the PPA webinar series. So look out for that after summer. We'll come back for that. And also, if you want to explore our platform for PPAs or other of our products, please reach out to us. You have our contact details, I'm sure. But now let me take a few questions. First one here is particular to the Italian PPA market. So Irina, how do you see the Italian PPA market unfolding?
Well, I know that I'm not entirely sure on this note, but I know that there will be, or there were recently some auctions for government support for renewables. I mean, again, going back to the renewable, to the energy market reform, both government support in the form of CFDs, ideally or similar to CFDs, and PPAs are seen as a way of boosting renewable production and reaching those 2030 and then 2040 targets. But to an extent, these two options are kind of competing with each other. So obviously, if a certain government support scheme is particularly generous, then a producer or a project may first try there before trying to secure a PPA. But on the other hand, as we saw also from the graphs, Italy did see some increase in signed PPAs this year. So it looks like the market, is growing there as well. But yeah, so it's difficult at the moment to kind of assess it, so clear cut, I would say. But there are some growth signals, I would say, despite the fact that there will be some government support as well.
Thank you. And the next one is a bit of a clarification question. The fair value of PPA are for 1 year duration only, Lisa?